We'll be looking at the winners and the losers given the decline in oil prices. Hello there, welcome to this edition of Global Business Africa. The next half hour will be live in London and in South Africa, looking at some of the key business news stories you need to know about today. I'm Raman Young in the Kenyan capital, Nairobi. Here's what's coming up. A weaker local currency and chronic power shortages are diminishing investor confidence in South Africa. And we'll introduce you to a young graduate with a unique business idea at keeping Egyptians fairly happy. Right then, it's not all bad news when it comes to falling global oil prices. At least that's according to some economic analysts in Nigeria. They believe that this decline in falling oil prices and the ripple effect that has on fiscal revenues could actually help to shift Africa's biggest economy away from its chronic dependency on oil and make it revive its agricultural and mining sectors, both of which have been neglected for decades.
Many world oil producers, including Nigeria, have been caught up in the web of tumbling oil prices. It's affected currencies and unnerved governments. Since June last year, oil prices have continued to slide from $115 per barrel to record lows of below $60 a barrel. While most people in Nigeria consider plummeting oil prices a serious crisis, one economic expert is taking a longer view and is more hopeful than most. Nancy Iloa, a business journalist, says it's a chance for Nigeria to diversify its economy. But that's a plan that's been in the pipeline for years now.
We need to begin to diversify. It's a no-brainer. We've been saying this now for how long? For many years. But we need to see a consistent restructuring of our economy away from oil. The tumbling in oil prices it's a crisis for us, but it's also an opportunity. So we need to begin to diversify away from oil.
Nigeria is the world's largest producer of cassava, yam and cowpea, all staple foods in sub-Saharan Africa. But it's still not fully developed its agriculture sector, which has the potential to feed the whole of West Africa.
Let's look at the years of agriculture. Let's look at the years of cocoa, when cocoa was sustaining the country. We have cocoa, we have other agricultural products, we have about 33 unexploited minerals in the country. We need to begin to look at that and in terms of how they will definitely impact the economy and get additional sources of revenue from those commodities. And of course, agriculture.
The slide in the world crude oil prices has been attributed to the increase of supply of US shale oil and the use of alternative energy sources. Nigerian economist Chichi Ashwe predicts prices will soon bounce back, as the US, which produces shale oil, is forced to reduce production because it's too costly to pump at prevailing global prices.
Conventional oil, that is supplied mainly by OPEC members and all that, is a lot cheaper, to pump out, than shale oil and gas. You are looking at cost of production of those oil at something like 70, 60, dollars per barrel. Just cost. So you see, if you have the price, continuously below 70, then it means they have to close down.
The crash of oil prices might be good news for consumers, but it's a different story in countries like Nigeria, who are still so heavily dependent on oil sales. Voldi Carosa, CCTV.
All right, then let's go through some data now. Conventional wisdom about oil prices often frames the decline you've seen from around June, July last year in fairly simplistic terms. On one hand, you've got oil exporters like Libya, Nigeria, Angola, Algeria, that sort. They're getting savage. And net oil importers are laughing all the way to the bank. That, however, isn't even accurate. We'll use Nigeria and Kenya's case study shortly, but let's start by taking you from the familiar to the unfamiliar. Now, this, of course, is a one graph that perhaps you're entirely familiar with by now. This essentially is the route in 1 month Brent crude futures from July 2014 to date. Pretty scary. But as scary as the headline numbers on the Naira and the decline in the excess crude accounts from Nigeria are, the overall picture for that country is a lot more nuanced. For example, the country is on course to have a fiscal deficit of about 1% of GDP by the end of 2014, and that's despite lower than planned oil output and this crash in oil prices. Its current account surplus, on the other hand, is expected to decline to about 2.4% of GDP, reserves about $35 billion by the end of the year. And the IMF is forecasting 5% GDP growth next year as well. The thing is, though, for Nigeria's economy as a whole, rebuilding reserve buffers, smoothing out the volatility we've seen in the Naira, especially in the fourth quarter, and addressing imported inflation risk amidst sharply lower fiscal revenues, those are key challenges for that country. Now, let's address the other side of that equation. Net oil importers laughing all the way to the bank, allegedly. That certainly isn't the case, at least not in Kenya's case, for example. This right here is a chart of retail prices in Kenya. Now, you will see, of course, that the decline started in September. That's 2 months after Brent crude futures started to slide in last year. Now, by mid-December, prices that Kenyans are paying at the pump are only 8% lower than their intra-year peak in September, about 116 shillings per litre. Now, keep in mind, Kenya imports petroleum products on a 30 to 45 day cycle, and that lag is reflected in the pace of that price change. However, what the decline in oil prices gives on one hand, the weaker shilling will certainly take away. For one simple reason, the shilling ended the year 4.7% lower against the American dollar, and that trend is still very much in progress. Why does this matter? Oil makes up about a third of Kenya's entire import bill, and therefore the fall in Brent crude will be, or rather oil prices will be partly offset by any weakness in the local unit and the rising strength of the American dollar. Let's get into these matters in a bit more detail with Melanie Rauch, who's live in London at the moment, to the perspective on the oil story. Melanie, since June, what effect has the decline in Brent and WTI had on the pace of new drilling by shale companies in the US?
Well, they're scaling down slightly, but it takes months for the effect of rising production to change the dynamics that we're seeing at the moment. Shale won't respond that quickly to the global supply glut. According to analysts, we need to see at least a year of significant growth before things will change. Economists are eyeing 2016 to see the effects finally feed through and when we might see a slowdown. US shale producer Pioneer Natural Resources is restructuring most of its 2015 hedge position to protect against further falls in oil prices. So there is the realization from shale producers that oil prices may very well not be going back to pre-crash levels.
Indeed, let's focus on that argument a little more. What's the pain level for shale producers in the United States? And at current prices for WTI futures, what percentage of that sector is unviable?
Well, that varies from region to region, and some analysts say that shale could cope with at least another 10% drop. Production is becoming more and more efficient for shale producers, and some analysts say rewind 3 years ago and $80 a barrel wouldn't have been viable, and now we know that $60 is viable, and some economists say that there's definitely room to move even lower and still maintain viability. No doubt US economies are forcing producers to adjust. No longer does the OPEC cartel call the tune. Low oil prices are looking set to continue for some time now, thanks to the rise in US shale.
Indeed, and it will be interesting to see exactly how that plays off against OPEC's argument about efficiency. Final question for you. Libya has been a key supplier of crude. Several interesting incidents over there. 4th of June, oil tanker getting bombed. Before that, in December, oil storage depot getting blown up. The market has barely reacted to any of this. Why are we being so irrational?
For the pure reason that they don't supply enough to upset the apple cart. We have oil producers all around the world who are producing more than is needed. Russia, Iraq, the Middle East. There's a huge supply glut. And when there's an overproduction of 1.5 to 2 million barrels a day, that's 1 or 2% more than the global consumption. Don't forget, huge economies are slowing down as well, like Europe, China, to name but a few. The US are producing shale on their own shores, so they can feed their own growing economy. So disruption to Libya's production just isn't enough to worry markets.
Indeed, a new era in which Libya has become irrelevant. We'll leave it there for the time being. That's Melanie Ralph live in London. Now then, let's talk about Tanzania. Economic growth does remain fairly robust down there. Inflation is at par with the government's target, apparently, thanks to favourable macroeconomic conditions. Now, those were the conclusions at the end of a review by the International Monetary Fund a little earlier on during the month. Although the fund was seemingly impressed by the country, it did point to risks that stem from delays in the disbursement of donor assistance, external non-concessional borrowing and shortfalls as well in domestic revenues. Tanzanian authorities, however, have committed to keeping development on track. They reaffirmed their intention to meet their budget deficit targets, review revenues, and also adjust expenditure altogether. Now, at the same time, Egyptian markets have started to recover from the losses that they had a little earlier in the week. You'll see these numbers coming up a little later in the bulletin. In early trading on Thursday, here's your play-by-play. The benchmark index had reached 8,947 points. That's 1.69% higher on the opening numbers. The increase came after losses early in the week, in which traders say the market is essentially trying to make up for. Now, this comes as the bourse did suspend trading in the shares of GB Auto. Apparently, the country's biggest listed vehicle assembler and distributor has not provided enough information about its planned rights issue.
Since the beginning of the week, and this was also the beginning of the year 2015, the markets have been experiencing a pretty bad trend. The trading volume was not strong enough to push the index up. On Tuesday, because of the small trading volume and because of the drop in world markets and especially the Arab markets, we were affected and we saw a large drop.
More market news now. Geoffrey Otieno Odundo, get used to that name. He's the new CEO of the Nairobi Securities Exchange. He replaces Peter Mwangi, who left the post on the 30th of September last year after his term in office expired. Odundo is an accomplished investment banker. He's got 22 years experience in the financial sector. 16 years of those have been in the capital markets in a variety of C-suite level roles, asset management, corporate finance and stock brokerage as well. He holds a Bachelor of Arts degree in Math and Economics from Egerton University and a Master's degree in Strategic Management from the United States International University as well. All right, then, quick run through the numbers here for you as far as the markets are concerned. Another day full of red ink, for lack of a better word. The Nigerian Stock Exchange all shared down by over 200 basis points. Egypt, however, posting quite the recovery. Thing is, though, keep a close eye on the NSE 20, specifically Mumia Sugar. It had a bit of a recovery today, but that's driven around sentiments that the Treasury, the Kenyan government, might actually bail them out. It's not confirmed yet, but they're thinking about it. Coming up next, weak local currency, chronic power shortages, all these things are dampening investor sentiment around South Africa. And we'll be in Las Vegas as well for a glimpse of the gadgets that might transform 2015 or not. We'll find out why next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global Business, weekdays at this time on CCTV Africa.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome back to the program. Let's talk about South Africa and business confidence over there. The business confidence index was down to 88.3 points in December from 90.8 in November last year. And it was driven lower by a combination of a weak local currency and chronic power shortages. According to the South African Chamber of Commerce and Industry, while the subdued business confidence index was broad-based, the rand exchange rate had a negative impact by countering the influence of falling oil prices. Now, the rand shed close to 10% of its value against the greenback over 2014. Economic growth failed to breach the 2% target as well. The Chamber is also concerned that electricity shortages will cause the economy to stagnate even further as business activity slows down due to a lack of power. Right, then let's head over to South Africa, Joburg to be specific. Sumitra Naidoo has been following these developments in detail. She joins us now on the line. Let's start with power issues, Sumitra. About 600 megawatts of generation capacity at Majuba was offline on Wednesday. Is that back online yet?
Unfortunately not, Rama. The last we heard, Eskom technicians were still trying to establish what caused the breakdown at the Majuba power plant. There were actually 2 generators that broke down this week. One was at Majuba and the other one at the Tutuka power plant, each providing 600 megawatts. The Tutuka unit was repaired pretty quickly. That unit is up and running again. We're not sure when that silo at Majuba will be up again. So yes, the grid is still running short on 600 megawatts. That station did come under severe strain at the end of October last year when one of the 6 silos cracked and collapsed completely. Later in November, one was out for maintenance, so there was also extra pressure on the rest of those silos. Majuba supplies 10% of the country's overall electricity. It's the largest supplier, so crucial at this stage. Rama?
Indeed. On Wednesday as well, quite a bit of concern coming through about Eskom's diesel stocks as power demand ramps up as people get back to work in early January. Do you know what the current supply situation is?
Well, Eskom has assured that it has enough diesel on hand to run all of its open cycle gas turbines. The utility hasn't given an update as yet as to how much exactly it has in its stockpiles, but I think Eskom CEO made it clear at the end of last year that there was clearly a mishap in orders for diesel, which led to that load shedding we saw in the middle of November, that it was unacceptable. And he also said it would be taken care of. Many read into that as a pledge to make sure that it doesn't happen again. Having said that, we also know that Eskom is struggling financially. It's hoped the war room set up by government to help find the funds for Eskom does come soon.
Indeed. A final question to you, Sumitra. This index did focus quite heavily on power constraints and the effect of the weaker rand. But what other factors drove the business confidence index lower in December?
Well, I think it's really hard to escape these 2 variables, the rand and of course electricity. The business confidence index hit a wobble in the middle of last year, largely because of the protracted strike action that we saw. But by August last year, it had went into recovery mode. And as you said earlier, in November, it jumped to around 90.8, a positive jump despite concerns around electricity. Now, the index showed 2 financial and 3 real activity sub-indices were positive month on month. The other 8 sub-indices were negative or unchanged. And I think what has become more evident in this reading is the uncertainty that awaits. This economy is under immense pressure. There's more strike action on the horizon, with the unions already demanding wage hikes of around 15%, which is more than double inflation. And the lack of movement from government in terms of implementing policy to change the country's economic fortunes. Global events also causing concerns. The crisis in Europe, the prospects of the US hiking rates, China's economy slowing, Ebola in Africa. There's quite a bit to deal with going forward, and I think the sentiment at the moment is not all that optimistic.
Indeed. We'll have to leave it there for the time being. That's Sumitra Naidu live in Johannesburg. She'll keep her finger firmly on the pulse of South Africa's economy. Let's move on to Latin America's economies as a whole. They've been directly affected by the economic slowdown in China, right across the Pacific. Now, according to some observers, as China goes, so does Latin America. CCTV's Paulo Cabral has this report from Sao Paulo, Brazil.
Latin American countries have a clear place in the world market, producing commodities, and they have done really well over the last decade. Prices have soared because of the Chinese appetite for products like soybeans and iron ore. Now the demand is going down, and commodity prices have been dropping too, adding to concerns about sluggish growth in Latin America. The International Monetary Fund has reduced its growth forecast for Latin America from 3% to 2.2% for 2015.
The demand for some products are going to slow down. So we in Latin America should adapt to this new demand from China. Today, China is the engine of our economic growth.
Analysts say China is now trying to develop its own consumer market after years of expansion aimed at exports. Some point to opportunities within the new model.
We need to counter this negative impact to develop more diversified trade with China. I think that Latin America has the possibility to increase exports of industrial products, service to China, and also would benefit from more Chinese investment in the productive sector here.
Trading with China was key for Latin American growth in the first decade of this century, and their economies are much more connected now, for better or for worse. As China's economy slows down, the impact could send a ripple effect across Latin America. Paulo Cabral, CCTV, São Paulo.
Now, the world's biggest consumer electronics show is underway in Las Vegas in the United States. Tech giants, Apple, Ford, apparently, a couple of other guys, all showing off their gadgets and companies from the likes of Samsung to Sony. They're all putting in the biggest show. MacNew has more.
The company with the biggest booth and the largest product line began its 2015 CES show with an awkward moment, discussing the cyber attack over the movie The Interview.
I'm very proud of all the employees and certainly the partners that we've worked with as well, who stood up against some of the extortionist efforts. Freedom of speech, freedom of expression, freedom of association, those are very important lifelines of Sony and our entertainment business.
Sony attempted to spin the incident into a selling point, stressing all the creative freedom that could be expressed through use of its new product line. Sony showed off this year's 4K Handycam, that's 4 times full HD resolution. It's 30% smaller, 20% lighter, and 50% cheaper than last year's model, selling for just $1,000.
So let's just say 4K for 1K.
Sony continued its creativity theme by bringing out skateboarding icon Tony Hawk to introduce the 4K Action Cam, which could give GoPro a run for its money.
It's the way that I always dreamed it would be.
But the star of Sony's show is its X900C 4K Ultra HD TV, which claims to be able to upgrade any video source to maximum quality. It's also only 2/10 of an inch thick, which means it's even thinner than Sony's very own Xperia smartphone.
Samsung was not to be outdone. It introduced what it's calling S Ultra High Definition TV, which also incorporates the Tizen Smart TV operating system.
This delivers the highest color purity and light efficiency available today.
But Chinese company TCL also enters the conversation for most cutting-edge TV at CES. The world's #4 LCD maker unveiled its 4K TV with a technology called Quantum Dot. TCL claims most TVs achieve about 60% of true color, while Quantum Dot technology allows for 110%. Mark New, CCTV, Las Vegas.
Right then, a quick run through commodity prices here for you. Let's see what's going on. Of course, we covered the oil route in a little more detail earlier in the bulletin with Melanie live from London. Gold posting a bit of recovery, up about 4/10. Cocoa and coffee, however, that's where the action is, up by 200 basis points. Up next, we'll introduce you to a young graduate with a unique business idea that's keeping Egyptians fairly happy.
Having lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant, and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Welcome back to the program. The Nigeria-based Tony Elumelu Foundation has launched its annual entrepreneurship program. Now, it aims to identify and support 1,000 entrepreneurs from across the continent every year for the next decade. The long-term goal is to have these 10,000 startups and young businesses from across Africa, creating 1 million jobs and adding $10 billion in annual output to the continent's GDP. The program is open to citizens and residents of all 54 African countries. Applications are open until March. Tony Elumelu, for those of you who don't know, is a Nigerian banker, investor and philanthropist. Over in North Africa, a Cairo University student is miming his way into the hearts of audiences across Egypt. Without special schooling, Mohammed Amin has taught himself with the help of books and online videos. Mahia Mutua has that report on Grassroots tonight.
21-year-old Mohammed Amin is a student at Cairo University's Faculty of Literature. But beyond the busy studying, he also finds time for his true love, miming. He has 4 years of experience and travels around Egypt's streets and theaters, performing to audiences and passers-by. He performs everywhere, from universities to street corners, first perfecting his makeup in public toilets, studios, or even in the car. Whether it's imitating fellow students, cheekily recreating daily activities, or simply entertaining, the mime artist says it's his sole aim to bring happiness to other people.
Well, it's more of a hobby rather than making money, because even if you earn some money, you will end up spending it on buying makeup, clothes and accessories. So it's a hobby. I'm just doing something that I love and making people happy, which is the most important thing for me.
He plans to grow his business to stage shows rather than just street performances, but at the moment there's not enough attention given to the art of miming in Egypt.
All our experience of miming comes from personal self-attempts, whether from YouTube or watching a mime show on television. We only have books to learn from, but no mime schools, and books are not enough to learn.
Mime artists are known to regularly wear black and white costumes and face paint. The art of miming is said to have originated in ancient Greece. The name is taken from a single masked dancer called pantomimus.
You get all types of people's reactions. Some accept it, others don't, and some think it's something silly and make fun of it with silly comments. And there are some interested in it and want to do it themselves. My family accepts what I do, but they want to see me finishing my studies first.
And so that's what Amin is going to do, quietly perform his way into audiences' hearts. Mahia Mutua, CCTV.
Right, then let's look at a quick run through currencies here for you. The Naira finally back at about 180 or so to the American dollar. The South African Rand was firmer earlier today, up 0.75% to about 11.59 against the greenback as well. And Kenyan shilling continuing its downward slide against the greenback, 91 being the relevant number for today. Now, here's what we're working on for tomorrow's program. We will be in Côte d'Ivoire. We'll be looking at the progress being made by the International Cocoa Quarantine Centre in the UK to develop disease-resistant cocoa varieties for West Africa. Should be a fairly interesting story for you, but that's it for this edition of the program. We like hearing what you think about what we do around here. Global Business Africa at cctv.com is the email to use. And of course, when we're not on air, Facebook and Twitter are your ports of call. We'll see you over there. The news continues 24/7. I'm Ramanya.